Hello traders, this is Dan Hussey from RGO Futures bringing you our end of day recap and strategy of the day for crude oil. We've got the WTI, the CL, light sweet crude, continuous daily contract up here for you. We're currently trading a February front month, but this is the continuous contract. And the reason I want to take a look and start here is actually taking a step back and looking at where some prior support and resistance, an area of congestion was in the market. And that came between the 65 to 60 area. This also ended up being fundamentally an important area for the market, because as we came down into these levels, is when we heard the news stories that these were the break-even points for new oil rigs, and more specifically, where oil needed to be for many oil ventures to be profitable. And that even included for like countries like Brazil that pretty much balanced their entire budget and budgeted assuming that oil would be above $60 a barrel. So breaking down below these levels was a fundamental play in the market, and a geopolitical play, as much as it was a prior support, even as short-lived as it was in early 2015. We did find it as resistance once before on a test back in late 2015 before we fell off and found new lows into 2016. Now, ever since that low, which from a fundamental standpoint, down into this 35 handle, down towards the 36 handle, and crude back in February of 2016. That low also was significant because it represents levels at which old oil refineries need to be above in order to be profitable. So from the larger fundamental picture that's being played out, and I just wanted to pull everyone's attention to these are also lining up with nice technical levels. So this full pullback that we saw in the market, we found support into a 50 to 61.8 area in that pullback, and that's where support was found for crude throughout 2016 after we rallied off of the actual lows down into the 36 handle. So we've rallied off that area. The crude is traded higher now, nicely towards a retest of prior highs towards the 56 handle, and upside projections. If you're looking at crude to do a larger three-way structure higher, we would project upside potential for crude in an equal legs towards the 62.50 area. So if crude does want to head higher, it has technical upside targets towards the 60.88 area from this 46 to 43 full 50% support, which I'll actually remove off the chart here because I really want to identify where some of the potential resistance levels are here in the near term, and see what, if crude is going to head higher, how can it head higher? And of course, if it's going to head lower, where are the places where we need to break down to confirm a true reversal? So we know that there's the fundamental resistance up into the 60 to 65 area, right, from in prior highs and prior congestion area. There's also the equal legs resistance up into the 62.50 area. Now let's dial down to the 4-hour chart, and from a 4-hour perspective, and coming up off of the lows from the 43.78 area, full 50% retracements if the market is going to pull back into a long at this point. Support could come into the 59.70 area. That's where full 50% retracement would be. And then to top it all off, equal legs, or if the market does pull back in 3 legs from where it created its current high into the 53.70 area, 53.79 to be exact, we could see also equal legs down. So we have another confluence of fibs here. If we do get the market to continue lower, we could see support into the 49.60 to 49.20 area, and then projected upside targets could take you towards a test of the 56.60s to 58.30s, and ultimately to the upside, that's going to look like a test of that 60 handle. So we have potential confluence of fibs below us that could offer support that at the end of the day could signal and give way to a rally and a test of new highs, and its solid test of that 60 area once again now as resistance to the upside, and that would be a continuation of otherwise the trend higher that we began here throughout 2016, and a nice pullback here towards the end of the year, and profit taking from otherwise the rally that's occurred all year would be expected, in crude at this time. So pullback potentially into support, which could then lead us to new highs. We're going to have to stay tuned to find out what happens here for crude, and I will be back with you as price action develops. Take care, everyone.